DR setting up. They're correct. They're correct. Okay. So let's start. Now they are gone again. Holy shit. Yeah, then we're using this one. They seem to work. 1.3, that's also what you're using. Okay, we're starting 5th of December. That's the ADR. Perfect. Okay, now we can go. I'm really sorry. Yeah, I used the older version functions, so I have to check the newer version. What's the problem there? So, sorry for the delay, but there seems to be a problem with my version, which I'm using. So, yeah. Okay, so let's set up some rules. Like, we only can switch the 5-minute chart because, like, if I'm switching to the 1 minute, the replay function gets a little bit disturbed. So we are only using the 5 minutes, so I will have not the possibility to switch into the 1 minute chart. And I'm just trying to make the backtest based on what I see, and I explain why I would enter a trade. So to use this function, I tested it before the stream. We would have to play this, but you can't set a stop loss, you can't set a target. So we're gonna do it just the old school way with a long and short position. And also, like, when I see something interesting, we're gonna do a quick interaction, and I'm gonna ask you if you want to go long or short or what you would do. So now everything is set up. So I think we are ready to start. What do you think, guys? Let's go. Okay, let's go. So let's let the one more, two. So the IDR is already formed. So that means we are getting a confirmation right here with the next candle. So that's the 8:30 candle. And based on this one, we are looking now for an entry into the long direction, right? So we don't want to have shorts in here. So we are looking for a long entry because we have the confirmation to the long side. So far there is nothing because at the end of the day, so now we're gonna use our DRs. So we have to do everything manually as you would do. So we reach 0.5. Still, there is no entry for me, which I can see. So you see nothing is happening here. No rejections over here. Actually, we are rejecting to the downside a little bit. So now we return to the DR levels. No rejection, we directly go into. Here we will see we have a little rejection here, but nothing I want to trade. Next candle is not able to close above the IDR level. We are staying below, so now again rejection from the IDR level, which is normally more like a short sign. So still nothing to trade. We are coming down, we are stopping right here, but as you can see, no rejection here, so we are closing almost below it. Again, now we can think. So now we can look. We have a fair value gap over here. Fair value gap over here. So I would say, like, if I see a proper rejection, I would consider a long now. Based on here that we didn't close below the 50, the midpoint of the DR, we have our opening line. So this is a nice cluster to look for a long entry. So now we see another rejection. So based on that one, I would take a long trade here. It stopped below 2 ticks below the opening and this cluster of lines. I know there is a fair value gap, but like actually either there is a rejection here or we will go lower. So that's how I see it. My target would be at least a new high, and I would take partials around 0.5 of the standard deviation. So now we have to do something quickly. We're gonna take our levels from here so that we have the, that's not the right one. Move this. Where is the DR? That's the DR, the RDR. So we want to have these levels always, and they count for the whole day until the next one is finished. It's getting a little bit messy because we have to use it like this. Okay. So we are in a long trade right now. Let's see how it's playing out. So we are getting again another clean rejection from the levels here. We are going up to IDR now. So that would be the point, like where normally that should be 1R. So I would at least think about decreasing my risk. So I used 1R and I would put my stop now at least here to reduce risk. Because like based on my rules, how I am trading, I'm not allowed to lose 1R when 1R plus, the trade is already 1R plus. So that's why I'm decreasing my stop loss now. And as you can see, we reduced now to 0.5 risk approximately. And we are getting stopped out. So now we add here trades, losing, winning, losing 1, winning 0, R equal 0.5 minus right now. Okay. Let's see how it goes further. So that could be like market could go up. I would be just stopped out because it was reaching my stop levels. So, but now we are coming down. So increasing or decreasing my risk would be making sense or made sense in this scenario. Now we're entering 12 o'clock. So I would be careful with entering any more trades now. So I'm not interested to take a trade here. This is a nice rejection, but it's getting already 12:30. Market continues lower and lower. That would be a nice retirement setup, but it's too late. It's 1 o'clock already, so I wouldn't take a retirement setup here. $140. So that's it for this session. Market rejects still. Still it would work out, but not interesting for me. And that's it. So now we can remove. So as you can see, retirement setup would have worked out, but I didn't take it. So you have to see everything what we are talking about right now is just my view how I would trade. So it doesn't mean that you have to trade the same way or you have to take the same trades. I'm trying to explain my logic. For me, it's too late. to jump into a retirement setup at this point, but that's just me. So there would be no harm, no foul if you would like to take this setup. It's still fine. Normally 1 hour, there's enough time for the market to really reach the levels. And as you can see, like trade would have definitely worked out. But like for me, just it's not worth to take this trade. Let's go further. And like for those who don't know, the retracement, the retirement setup is simply once you get a confirmation long what we have, as soon price returns in the area of the opposite IDR levels, that's the retirement setup. So what you normally would do, you would enter a trade somewhere around here and you would have your stop loss 2 ticks below the DR low in this case. And your target would be either again the other side of the DR IDR levels, or even the higher target would be the next or a new high in this case. So if you take these trades, whatever you enter here, you would put your stop here, and either this would be your target or this would be your target. So either one of them. But that's a very nice example for the retirement setup in the first day we are going through here. And I think like it's definitely one of the best setups, I would say, which you can have when it comes to DR, IDR. If you're not looking at anything else, that's definitely a setup to look for. Okay, so let's go and continue now. So still, I'm in minus right now. So we are farming the ODR now. It's nothing confirmed right now. So we are looking, okay, we are at the levels here, nothing confirmed here. So let's look. So now we are at, we have early confirmation for short, but not a confirmation yet for short. It's an early confirmation. Now we have a confirmation for short. So we would be looking for a short entry now. Let's see how this plays out. So far, as you can see, I don't see any rejection here, which would be interesting for a short. This fair value gap is not interesting for me. Still nothing valid for me. 50% line is here. This is just the RDR levels. We are rejecting from there. Again, confirmation. Still nothing for me to trade. So one possibility would be this fair value gap, which would be also not interesting for me because it's not connected to DR levels. So this is in the middle of nowhere. We need to close above DR and IDR, and here is nothing to reject from. So that's why I personally not like to or would not take this trade or this fair value gap. So let's see. So now we are getting a rejection. We are seeing a rejection from the DR levels, IDR levels. Still nothing here. We're making a new high. Let's see. We are still above the IDR levels. Now we are closing directly over the midpoint of the DR. So nothing interesting time-wise. 610. So now we're getting another setup, retirement setup, and this time I will take this. So I would enter directly here somewhere. Let's be fair. Let's say I enter here. My stop would be 1, 2 ticks above, and my target would be a new low. Let's see. So I would be stopped out with the next candle. That would be full minus R. And I would re-enter because we are not closing above the DR levels. So that's like when I trading this scenario, I always use 2 entries if necessary. So that means that at the end of the day, I got stopped out and I would immediately re-enter this trade. And I would have the same stop again, 2 ticks above the DR levels, and target would be again the same. So let's see. Well, it seems to work out. We're coming closer 7:20. We have time till 8:30, so more than 1 hour, 10 minutes. So this is not a nice setup, but as I'm in a trade, there is nothing I can do. So I don't reduce my stop. So like I said, you can go on BE for this one. I would be on BE, but there is nothing more to reduce because like at the end of the day, if you look closer, you have volume imbalances here and here. So it was kind of expected that price will retrace a little bit. I personally don't like it that it's retracing so high, but there is nothing to do right now. Just waiting what price will do. So it's 8:30. Like you either sell the trade here at 8:30. I would keep it for now. So 8:30 would be 4.9, but I'm still sticking to my target. And stop is on BE, so I can't lose anything with this trade. Okay, so we would get filled with this trade. That's our first winning trade now. Costed us 2 entries, but it was worth it. So in total 7.8 R. Let's make it 7 because I think I moved the entries a little bit. So let's say 7. That brings us to plus 5.5 R. Total trades 3. Okay, that's that one. So let's continue. So now we're going into the regular session. We can remove now our standard deviations and we're gonna see what's happening here. 1, 2, 3 candles. Yeah. So we see the DR forming here, the regular DR. Gonna put our standard deviations, and from now on we don't have confirmation. We don't have any indication, so we're gonna see what's gonna happen. So price is going above the middle point, and like there, like now we could potentially look for a long, but like we're coming RDR and ODR were kind of, this one was more accumulation and now we have the distribution. So I wouldn't consider a long without a confirmation in this case, but that could be potentially something you could look for. Would I go for a short here? No, because I don't have any confirmation, not even an early confirmation. So no, nothing interesting yet. So now it's getting more interesting. We are rejecting from the DR, IDR levels here and the opening price of the RDR session. Considering that price was coming down here and look at the model. So we have a slight expansion to the upside and now price is not able to come back into this area, into the ODR area. So like, and we have a big expanding DR session. So considering a short would be an option, but I guess I want to see the next candle. Okay, now it's getting clearer for me. I will enter short here because there is rejection here. We step into this one, we are rejecting from here. We are rejecting from here, we are rejecting the IDR line. We are not able to close, so that would be a short sign for me. In reality, I would look into the 1 minute chart, but I can't right now, so I just have to take it here. And I would enter with the close directly here. My stop would be above the DR levels, which is also the IDR level from the ODR. Yeah, makes sense? So you can always get wigged out here, but that's the risk I am taking. That's fine. If we see another wick, I would not hesitate to re-enter if we close again below it. But like in general, a lot of people are asking me for the stop placement, and that's my reasoning behind it. So I see this, I see the expansion. The RDR is breaking to the downside. We have an expanding model here. We are rejecting from the DR, from the ODR. And so my stop would be above these three levels, because if price action is closing above this, I know that the algo will go more up, and the interesting time would be to look for a long here if you want to go long. Also, we would get confirmation and all of this stuff. But that would be an early entry. So target, of course, let's take the IDR and potentially a new low. But I would take earlier some profits here, either 0.5 or IDR levels, that's up to you. But that's like potential profit taking because I don't have any confirmation. So technically what we could see on a day like this would be this, and then this, and this. So we can see a range RDR in this case, and then up again, because there is no confirmation yet. So I'm taking an early decision to go short without confirmation based on the reasoning I just said. So let's see how it plays out. Geez, I learned like that. So, yep. Let's see. So partials here, and partials below at the 0.5 if you want. That's up to you. So you see, we are wicking into it. So far, stop holds, but we are in minus with this trade. Rejection, so price is not able to close above. Immediate retake, so we close above the IDR levels and immediately close below. So we are taking back the level instantly. Rejection, like 3 beautiful rejections from here. 1, 2, 3, 4 rejections so far. 5 rejections. So even if you don't take the early entry here, even with the early indication for long here, that could be considered to look for a short, because this is just talking 1,000 words to me, like rejection, 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 rejection. Like we are not able to come above this level from the ODR anymore, and we are not able to close above the IDR. And again, we're seeing it again. Up wick, rejection from here. We close a little bit above the DR, we're getting rejected immediately. Market tries it again. Market tries it again, gets rejected again. So this is like a sequence of 5, 10, 15, 20, 25, 30, 35. It's almost 1 hour where price is telling you, hey, I can't close above these levels. So that should give you a really, really good example of how to look at rejections, because like this is very clear to me. I hope it's clear to everyone else. Okay. So price is rejecting, we're reaching the 50% level. So let's take a partial here from our trade. That would be like, normally I'm taking 3 partials when I'm really trading. So in this case, it would be, let's say 0.7 R, a little bit more, let's say 0.7 plus. Market goes lower. Here again, we are seeing like respecting the 50% levels here. Again, same. Now we go above it. So now, if you're looking for a short trade, I actually would like to have price respect this fair value gap. I don't want it to go back here, but it could happen. Because again, we are above the 50%, below the IDR. It could be happening, but strong price action would take this fair value gap and wouldn't retrace up here. But that's just personal, my opinion. And as you can see, my opinion was correct in this case. We are going closer, lower. I wouldn't be tagged in here, so technically we are still full in the position, so we didn't reach the IDR, which would be my second partial. So of course stop would go on break even in this case. I don't like to put stops below break even. That would be a time thing where I would put it over here, but there would be no problem if you say, okay, I already took a partial, I put my stop loss here. Still, we are working a DR session where we have no confirmation. So if you do that and you move your stop here and secure at least for the 2/3 of your position what you have, you save another R. That's absolutely fine. Me personally, I don't do it because that's just how I'm trading. But that doesn't mean that everyone should act like that. It's just me. I'm sometimes a little bit stupid with my stops and my targets, but it's paying me for years, so I'm fine with that. But like this, moving your stop over to this level would be like completely correct. So you understand? Okay. So let's see how this turns out. Oh, are we getting tagged? Nope, not again. So I would be still fully in the position with 2/3. So now this one I would consider as being ugly. So this is the point where I would say, okay, now I would move my stop over to this level, because literally this could be just a range play. So we reached the lower range. I was unlucky not getting tagged in here or filled in here. Now we're going up. So actually now, me personally, I would move my stop over here, because like in my opinion, if we see a structure break over here, I consider price moving up here or trying again this level as very possible. So when we go over here, I would say I have a low probability trade with a higher risk. So now I move my stop to the level I just said to you, and see how it's playing out now. Time, we are 1 hour, power hour coming in. So what we can see here, so we tried to close, or we closed above the 50. We went down, we rejected a little bit from, but like here, like again, one more reason to put your stop onto break even or even the level what I said. We see a nice return into the fair value gap. We have a clear rejection from the lower IDR levels. So long would be with early confirmation. It would be even worth it. It would be not 1 hour to the close. Now you could consider a long trade, taking a long trade here, getting out of your short trade, because idea behind would be you have an early confirmation for a long trade. You have 2 times clear rejection from the IDR levels to the tick or to 0.25 tick. You have, this was the low, it tried to take out this low. We have a structure break over here, we return, and we are getting rejected now 1, 2, 3 candles from the fair value gap. So I don't do it because it would be 1 hour, but like that's a valid thought you could have because of what I just said. So you could reverse your position here and look for a long trade, which would go above these levels maybe. We are staying, like I am personally staying in my trade. As you can see, again, another entry version for a long trade. Some rejections over here from the midpoint. So I would consider it maybe 50-50, maybe a little bit slightly long favored because of the early confirmation. But it's unclear right now. But like a little bit more into a long trade, I would tend to, but nothing. It's 15 minutes to close, so nothing to do anymore. Again, another rejection from the fair value gap. And that's it. We are closed. So we took one here, so that's 1.72. Let's make it 1.8. So let's say 0.6 with the partial, and we're closing our trade. It's at 4 o'clock. Opening price. That's 2.26. Let's say overall 2R for this trade. Was a winning trade. And we have 7.5 now. Okay, let's have a break. Anything unclear? Because like I'm really watching the charts. I can't follow the chat. So any big questions, anything you want to know or like to ask so far? Great that you have fun listening to it. Okay, maybe a good question again, like why did I take the shot? I mean, I think I said enough about it, but like look at the ODR levels. So maybe it's not clear. So the ODR levels here are the same, like every DR level during the day is an important level. So yeah, we have the early confirmation, but as I explained, we were not able to close above here and above here, and we not even touch the DR level from the RDR. So what we can see, first we are rejecting from this level here, draw it out again. So we are rejecting clearly from this level. And then we even go below and we have 1, 2, 3, 4, 5 candles which are rejecting the IDR from the RDR session. And we are closing above, we're getting rejected. We are closing above, we're getting rejected. That's the reason why I would take a short trade there. I hope that makes it a little bit more clear. Yeah, you could take this also as a retirement setup. So this is a day, as you can see, we had no confirmation this day. So when we don't have confirmation what the market is doing 90% of the time, it's just playing inside the DR levels and mainly in the IDR levels. But you don't know this because at the end of the day, when you're looking at 11 o'clock, you don't know what price is doing in the rest of the session. So you can never be sure that price is going into the range and you will see no confirmation. We could have gone below here, we could have generated a short confirmation, but you don't know this when you're looking like in real time at the prices. Is it clear now why I was thinking about we are not talking higher time frame. Like today the backtesting is very simple stuff, very simple entries, just using DR, IDR and fair value gaps and other things, which I will see or not, depends on. But consider like this backtesting right now is I'm not having a higher time frame bias, I'm not looking at price on the higher time frame. So I miss a lot of PD arrays, which normally would even make my trades a little bit better. But like today, we're just focusing on an early backtesting in terms of we are just looking at DR, IDR, we are just looking at the moment, we are not looking at the past, we are just focused on using DR together with fair value gaps and other things which will I point out. Yeah, like these are all market orders. I don't like limit orders, but like that's also a reason because generally with my account size, I don't like limit orders because I don't want to have them lingering around in the market. So I mainly use market orders and direct order routing. RDR, like this RDR session now and the standard deviation, they stay valid till the next one is formed. So until the next day. Okay, let's continue. Let's remove that. So now we are forming our after session DR. So as you can see, session is finished. So far, we see a break from the previous DR levels. And that's all what we can see. So the only thing why I would not consider a short here is the volume imbalance in here. We have like a big volume imbalance over here. So looking for a short, so that's also the reason why I would not considering entering a long here in this big fair value gap, short, sorry, because like I would suggest or I would think that the market is closing this volume imbalance before he's going anywhere else. Okay, let's look what is happening. So only early confirmation so far, not a confirmation with close below. You see price is staying mainly above the IDR levels, just like we saw in the other days. This is something you really have to train your eye to see how price action is happening around these levels, DR and IDRs. Because like that will give you a lot of understanding about what the algo is doing next, to be honest. I mean, it can't get any clearer. We stay above this, we try to close below and immediately gets back up. We're closing again below it, immediately gets up. So that's what I call the rejections from this level, which is very, very clear to me. So when the market and the price is acting like that, I am not very keen to look for a short, even without having an imbalance or something above us. So now I would the first time I would look, okay, how is price reacting around the 50 midpoint? I'm saying that I would look at this when we don't have a volume imbalance above this, but like this is the next level I would look. Do I see rejections which would allow me to go short? So we see a little rejection, but still I don't like the volume imbalance above us. So price is retracing, back again, gets rejected from the IDR levels. Stays there. Nothing interesting right now. Tries to get to the 50 midpoint. Closes above the 50 midpoint. Time-wise, it's 1:10, so 50 minutes left for the after session DR. Not reaching again. So nothing happening, no trade for me here. Where's my... Here. And let's go. So now we finally, session is over. Like if I draw this more out. Again, like that's precision. I mean, can it get clearer? No, I don't think so. So now look at this. We have another volume imbalance down here. So session is over, so we can just skip forward. Look at price. I mean, we close one time above, we return into the volume imbalance, and from there on, nobody is able to close above it. So that's, again, if I'm looking at it, you can see what I mean. This is like very beautiful price action. So we are building now the after session and how it looks like what we are seeing here. We have here the after session, and right now it looks like that we want to build out our ODR inside of the after session DR. So look at this and look how we are forming right now. So what does it mean if we build inside? Oh, it was a little bit quick. If we build inside this area, it would mean that we have a range day, or like we can expect a more range day instead of an expansion to the side. So now we are extending to the top. Now we are closing above the previous IDR and DR levels. 50, 2 more candles. So now we are done. So we are closing above. So now we didn't make it. Look at my part 3 video. So we did not close below the midpoint of the ADR, and we are expanding to the upside. So we are closing above this. So this could be an early sign for a range expansion model to the upside. Look, part 3 of the DR series. So now we are finished. That looks very bullish to me. So let's see how it goes. So we're closing. Now we have an early confirmation. So that means we are looking for a long trade, or I am looking for a long trade. Not enough rejection. Now we're seeing rejection over here. Let's see if we get one more. Another one. So we have no fair value gap here. Let's look for another one. Closing below. Going up again. Closing below. Closing below. Going up. Nothing interesting for me right now. It's like, it's not clear rejection here. So if you wonder why I'm thinking about, like, this is just like circling around it. I don't see like clear rejections over here. You could say clear rejection from this level, but even there I don't like it because it's going down, going up, going down. Let's see if we get a better one. So here little rejection, but the next candle, same game. Closing below, going up again. Nothing clear for me right now. Still, we're always going below here. I still don't like it. It's not clear to me. Maybe for some of you, but for me not. So this I like more. It's the first really good rejection. This one I like. Another one is following. Another one is following. Another one is following. Yeah, I think I would take a long trade now. And I would put my stop 2 ticks below this low. Because like here we wick too many times through it, so I would put my stop loss over here. Target would be here. I don't like the risk reward ratio, so we have to take our 0.5. It's also not there, so no, I can't take this trade. The risk reward ratio is not worth it, so it has to be at least 2 to take a trade for me. So we can't take this trade, so we don't take it. So that means like we need to see price, like optimal case for me would be a return into this fair value gap. If I could wish myself a trade, it would be return over here, clear rejection in the midpoint inside the fair value gap. That would be a trade I would like to take. Oops. So now we are dropping below. We see a clear rejection. So now I would be long. Stop 2 ticks below the open price, or if you want, you can take the candle down here. With target new high. 1.96. Okay, we let this go through. I like it. So stopped out. Stopped out here, and I would re-enter now because now we are seeing a retirement setup. And we would take a long position. Stop below 2 ticks. Target new highs. Time-wise, no, we can't take this because it's already 8:10, so session is over. We let this go. Let's see if it would have played out. So again, my timings and my rules for when I can take trades stopped me again to take a nice retirement setup. Setup is still the same. Unfortunately, this setup came around 8:15. And as you can see, if I would have taken this trade, it would have a good trade. So we have to add one losing trade. And we are at 6.5 now. So again, retirement setup would have played out. I didn't take it because it was too late for me. So now we are going to see what is happening during the RDR. I can remove this one. So again, if you're looking now, what we are seeing, it's already forming now what I said. We have the ADR. The ODR is not able to close below the midpoint of the ADR. We are closing above the ADR highs. So that's the first step for a range expansion model. As it looks for now, we're gonna see a range expansion model. That means like even right now, you could start looking for a long entry because of how the relation between the ADR and the DR sessions in between is working. So now it's 10:10. So this is very nice. We are returning into this fair value gap. We are rejecting from there. So I will take this directly long. I don't need any confirmation anymore. I suspect that this will be the low of the day, so it will be not broken. And I would enter long, and I'm gonna make a bad trade because in reality, I would be already entering on this candle, but like as we are in the replay mode, let's make it bad. So somewhere here that I entered, which is the 50 midpoint. But I think everybody understands that if you have a long bias, here's the fair value gap. You see the rejection if you don't buy the fair value gap directly. Then you enter a little bit later, but I will make the trade worse than it is. And I will put my stop 2 points below the IDR. And my target would be, we can remove now this one. Range expansion means that we also see a bigger range extension. So it means my first target would be 0.5 if the DR stays like that. And my next target, I would take a partial here and a partial at 1 point. So at the 1 standard deviation. Let's see. Okay. confirmation already, early confirmation between 10:30 and 11 o'clock is normally a very good sign that we will continue into the right direction. So partial one would be taken here, half of my position. So that would be 1 hour already taken. And immediately afterwards, we will take the next one. It's taking it. So 1.5 plus 1 plus 0.5. No, am I right? 1 R plus 1.5, so 2.5 R. Trade done. That's it. 6 trades. 3 winning. And we are going to 9R plus. Okay, let's watch price action. Can remove this, by the way. So range expansion model, normally we don't. Oh, you couldn't hear me? Since when I'm not? Oh my God. Since when you couldn't hear me? Oh my God. Crazy, good. Okay, where did I didn't hear you? Great. 5 minutes? Which was the last trade you heard me talking about? 3 minutes? What did you see this trade? One trade back, this one? Range expansion. Okay, okay, let's go over it quick. So, oh my God, that's funny. So I said, like here, I said that we could see a range expansion model, and with the break in the early forming of the DR, it already confirmed that we will see a confirmation for a range expansion model. This fair value gap and the return here was the enter for my first trade. Because I was already bullish on the range expansion. I took profits over here, 0.5 and 1 standard deviation. And I took another trade because range expansion means we are very bullish for the day. This model tells us we are expecting an expansion to the upside, as the model name says. So a return to this one made me take another long trade, which then I targeted the next standard deviation, which was around 0.5. So that's the second trade, which was a winning trade. And then I was saying that if price comes back here and rejects from the 0.5, I would have taken another long trade. But unfortunately, price didn't come back. So we only had 2 winning trades in this session. But that's it for this session. And I also said, and I had fun with myself, obviously, talking about how much it is crazy and awesome and mind-blowing. And every day I'm looking at it, I can't get enough from it, because like the reactions, even at the standard deviation levels, they are just magnificent. That it's just not from this world. This is just beauty pure. I mean, how much more do you want when you're trading and you're seeing the respect of price and the algo of these levels? I mean, the rejection here from the 1.0 standard deviation, down, back, rejection here, closes exactly pricing, and we are opening here, we are rejecting from here, we're going, we are rejecting from here. It's just, it gives so much away. Yeah, you can use it technically to trail your stop. It's just art. This is like it's like looking at a perfect picture, a perfect Picasso. That's what it is. I mean, it's just crazy, in my opinion. So this together, I think the most important from this backtesting day is just really to understand that already here, when this one formed and we didn't break below this anymore, and you see the first 2-3 candles opening in the New York session, that's already a trigger. You know, based on the relationship between the 3 sessions of the DR, that you will expect a range expansion, because that's the model. And if you study it, you will see that. And you can know it as early, really, the first 3 candles here with the close of this candle. You can be sure that you have a high probability for a range expansion. So any questions? The second trade. The second trade was just like, okay, I know we are in a range expansion model. So we go here, we're rejecting from here. And here I just use the levels. I'm pretty sure if you would go into a lower time frame, you will have a fair value gap here in the lower time frames. But for me, just the return here, when I see a range expansion model, I don't expect price to break the DR anymore. So I just this retracement as the entry, and my stop is below the DR, the IDR levels here. And as we already reached 1 standard deviation, my next target would be the next standard deviation, which is here. So that's all I can say about the second one. When IDR is higher, no. Yeah, just check my part 3 video. If you don't know what I'm talking about, it's really important that you check the DR part 3, because there I talk extensively, not extensively, but I talk exactly about this model. I'm showing it in the video and I'm saying what rules it follows. It has a lot to do with the 50 midpoints, and here in this example you see what I'm talking about in the video. So price was never able to take out the midpoints of the session. Yeah. So even here, like for the DR, I hate this magnetic. So after the ODR was closed and we start into the next session, price never closed below the midpoint of the previous session. And what is important for this model, you need to see the expansion above the previous DR, IDR levels, which we see here. So here expanding, here expanding. And you know this because the range of the DR or the RDR in this case, once you have a candle here, you already have the range. So it can't get smaller anymore. So that's why with this candle close, or even with this one, but I would prefer this candle close because it's above this high, it's already clear to me that the expansion will happen to the upside. Okay, anybody keeps track about how many days we have now? So I think we started on the 4th of September, right? Yeah, Sunday. So Monday we have now, Tuesday, and that's Wednesday. So we are finished with Wednesday. So that's 3 days. We would have 3 losing trades, we would have 4 winning trades, 7 trades in total, and right now we would be sitting at 12.5 R, which is quite okay. And considering that I didn't take the retirement setup here, the retirement setup the previous day, so I think that's quite good already. So let's see now what else we can have. It's really annoying that I can't see the chat because my micro is on top of the chat, so I always have to bend my head to see what you're chatting, guys. So let's go. So regular session is over. We are jumping now back to the ADR session, which will be the next one, which is forming right now. And you see, like, please keep in mind when we are doing this, I'm not looking at any PD areas, which I normally do while I'm trading. So this is really just, I'm backtesting with you, just very simple techniques. There's no, I'm not looking for order blocks, I'm not looking for confluence, I'm not looking for overlapping stuff. It's like really the easiest way of trading DR, IDR. Understanding the DR, the IDR, understanding where are interesting levels, and all I'm looking is at this right now. I don't have access to the daily chart, I don't have access to the 1 hour chart. So this is really the simplest and easiest form to trade right now. So we are closing here. Let's get back. That's the ADR, so morning session. So we have a confirmation, not a confirmation. We don't have an early indication, so we're just waiting. Generally, after seeing this price action and the expansion we had the day before, I would expect some sideways movement. So I would be not so keen to jump directly into a trade. But like if the setup is right, I maybe would change that. But for now, nothing I see. So we are getting a confirmation to the long side. Unfortunately, we're getting rejected over here, so we take out buy side liquidity over here. So actually, no matter, like I would rather see it coming like that than going more to the upside. But that's not based on the price action we have seen here, plus the rejection from here. It's not very nice. Let's see. So here, double rejection from the DR. We are closing below the IDR. Let's see. It's fighting around this IDR level. That's like also fighting. The algo doesn't know what to do. So it's unclear what he wants to do next. And that's like these candles are showing you that. So we are expanding to the downside. We are getting rejected from the midpoint and the 2.5 RDR level. So now I'm interested in a trade. What time is it? Yeah, we have enough time. So everybody sees what I see. So this is the 2.5, this is a standard deviation level. I see a rejection from here. Price even rejects the midpoint of the IDR. So now it's interesting. And also on top, we have volume imbalance over here, which I expect to be filled. So let's take a long trade here. So we're entering here. My stop would be below the standard deviation level. And when I show my stops, it doesn't mean necessarily that you have to work with the same stop. So like for this trade, for example, as long your risk reward ratio is fine, so target would be either this one or a new high. You could have your stop even below here or here. Just look that you reach at least 2R risk reward ratio. I wouldn't take trades below that. But that's just my opinion. So if you take this trade with this stop loss and the target here, it would be a valid one. But I like to work with a little bit tighter stops, but there's no harm, no foul in having a wider stop and just playing it safe. Because if I get stopped out now and I see another retirement setup, I technically have to re-enter or would like to consider to re-enter. So I'm risking 2R during this session for exactly the same setup. Yeah, I'm just tuning my my entry point and my stop loss level. So having the stop below here, there is nothing wrong with that. Just not how I like to trade. So are we getting tagged? I think so. Low is 40, 26, 25. And my stop is, yeah, we are out of this trade. So we are -1. And that's what I meant, what I was talking about. So if you use the time stop like I do, you're always coming to the point now where you say, okay, the scenario which I was looking at is still valid, right? So do I risk another R or I don't? So if you would have your stop down here, you don't have to worry about that because at the end of the day, your stop is covering the whole scenario. Long confirmation, if it closed below here, we have a wrong day in the DR, so you know you're on the wrong side. I now have to consider if it's worth for me to use another R in this scenario or I just sit it out. And how it's looking for me right now, let's see. Yeah, I have to re-enter. That's just how I trade. Doesn't help. So I'm risking another R. This time my stop will be below the DR 2 points and my target would be a new high. Let's see if I'm lucky. So we see we're closing the volume imbalance. See in the up move we leave another imbalance in price structure here. So market returns, all expected, nothing crazy. Stop would go below, like would go break even now. So that would be a risk-free trade. So we're reaching the DR levels. Unfortunately, I'm not getting tagged in right now. So now we are tagged in, we are closing the trade, 2.83 plus. We round it up and we say 3 plus. I will deduct when we have something to deduct. Don't want to make a math competition out of that. So 9 trades, winning trades 5 and 3 plus. So we are 14.5. Like 4 days now, that was the early session of Tuesday. Everybody saw what I said here, like returning this is a very good indication a price will return, and the same we have here. So really pay attention to this volume imbalance because they're like gold. I mean, they're telling you literally how they appear. They can tell you what the market is moving next to. So in general, I was very unlucky getting stopped out here. What to do? So if you would have taken the trade like we discussed before and you would have your stop below here, you would be not losing 1 hour, you would just have one winning trade, which would be great. So checking, you lost one here, so +2, 1 hour. Below the DR to the left. Yeah, this one is definitely something to look for. In general, like we have here lows which will be taken at one point. So literally what we are training here, and I even don't know if I would trade it on a normal day, because like this is just like accumulation here. This is just like we are working inside of this last high, and I do expect my general market understanding, I would expect something to the downside. I can be wrong, I don't know. But like if I'm looking at the price structure here, I'm pretty sure that this volume imbalance will be filled. But let's see. Okay, let's go. Session over. So we even extend to the above this high. No, it wouldn't scare me from the long. I mean, like, just last question to the volume imbalance. So generally, like, look at the price action. So my mind is more looking, yes, I'm expecting a retracement, but in general, this price action looks very bullish to me. So I'm more afraid of gaps inside a down movement or a volume imbalance. So these gaps have much more impact to me than bullish gaps like this one and this one. Because right now, the last price action we have seen is very bullish. So it's more likely that downwards volume imbalance get filled before we go back at one point and fill these upward balances. Makes sense? Yeah, session over. Just check the DR session timings. So that's the session timings. The RDR goes from 10:30 to 4 o'clock. The ADR goes from 20:30 till 2 in the morning, and the ODR timing is from 4 till 8:30. So everything in between would mean time is over. So I normally don't want to take a trade 1 hour before the session ends, except I like it a lot. That's what I meant with I don't have enough time anymore. Okay, so now, as you can see, our volume imbalance get filled now. Not surprising. We have another volume imbalance over here. So what we have seen, we have an expansion to the downside. So right now it would be neutral. So now we are seeing an expansion model, most likely. Let's see how we close. Yeah. So we are closing now. So this is again part 3 of the model, which is like that looks to me right now like an expansion model. So range expansion means more price action in a range, even extending to the up and to the downside. So expect some choppy movements because that's what this model is telling you. You can find this also in part 3 of my video. So as I'm expecting price to go lower because I'm expecting a retracement maybe into this fair value gap, taking out sell side liquidity. What would be an interesting another point? Yeah, maybe even down here into these areas. So let's see. Not taking any trades now because like this is a very complicated model to trade. So I'm gonna be careful. So we have an early indication for short. Not a confirmation yet. So now we are looking at this. It's not really a nice rejection, right? It's like candle closes above, so nothing to do here. We have a fair value gap and we still have this volume imbalance, which is drawing price. Rejection from here, leaving another volume imbalance, don't like it. Still, this one is not filled yet, so I don't want to take a trade. Range expansion, I'm very careful with what I'm trading. So now we're getting, we are filling it, but like just a little bit. Now, do I take this? Do I take this or not? Not yet. So this, like again, this, we don't have a confirmation, so that's the retirement setup without confirmation. But like with this ADR and now the expansion in the ODR, I actually expect price to sweep above this. If this would be a confirmation down here, I would take the trade now. Without the confirmation and the setup of the two ranges together, I expect price to sweep this high, to be honest, and maybe filling in this little volume imbalance. So let's see. So I have to go one back. Can I go back? So as I said, like price is looking to fill this volume imbalance. And as you can see now, we are sweeping, we are taking the buy side liquidity over here, we are taking out this this volume imbalance, and now I'm ready to take this, I think, because it gave me everything I expected. So this volume imbalance is closed. We swept the buy side liquidity up there. Maybe it could wick above this high, but I don't think, because I don't believe that there is any important liquidity here. So the next liquidity point would be here. But like we are expecting a range expansion model, so now I'm expecting price to come down into the lower range. Also, we have the early confirmation, so we're taking a short trade here. Stop 2 ticks as for the retirement setup, and target a new low, I would say. Let's see where the 0.5 standard deviation is. So it would be around here. Yeah, let's leave the target on a new low. That's enough. It's fine. So we are short now. Same setup like before. If we wick and stop, if it wicks above, stops me out, I'm ready to take another trade on this one. Okay, price would go, like price is going downwards. That's nice. We are more than 1 hour plus. So my stop would go on entry for this trade. And we would be stopped out because of the wick in here. So nothing won, nothing lost. I'm switching too quick with the candles. 820, so we're not going to take another trade. But technically, again, we have another retirement setup. Still valid what I said up here, so you could take this one again. For me, I don't take it. So it would have worked out for me nothing. We don't add the break-even trades, we just leave out of the statistic. So price reaches the new low, price reaches even lower. So that would have been a good trade. Unfortunately, wicked out. What to do? But in reality, you could take the entry here again. So that's just happening. That's just trading, even if it's the right trade. But me personally, I'm not getting bothered by those trades because it's just what it is. There's nothing. Yeah, it doesn't touch me because like these setups are coming every day. I mean, just look, we took a random week. I'm not looking at any higher time frame, and look at all the setups we are seeing. It's so abundant on setups that I don't mind if I don't take one, if I don't like this one. If I'm getting stopped out, I'm just stopped out, fine, while waiting for the next setup. Okay, so let's have a 1 minute break for a second. I really have to go to the bathroom. So I will be back in a minute. See you in a second. And there I'm back. So, do you like it so far? Does it help you? No, the ODR fibs, I don't carry them over. I like the only fibs or the standard deviation which are carrying over is RDR to RDR. Okay, shall we going? We're already doing like over an hour, so I don't mind to do another half an hour or some days. You want to? Let's go for it. I can't show you how to use the daily time frame here because I really want this video being based on very simple stuff. I think all the trades which I have shown you, which I would take in these scenarios, they are very simple and very logic. And you don't need to be Superman. You don't need to be a professional trader for 20 years. All you need to do is, um, thank you very much. Where is this coming from? Pokemon 50? Thank you. How is that? Like, did you just donate it 2 euros to me? Wow, that's nice. I didn't know that we can donate stuff here. Wow, nice. I like it. Thank you very much. Thank you so much. I'm gonna give it to people who need money. I love it. Thank you very much. So, I hope I didn't miss other ones because I was not looking at the chat, to be honest. But like if somebody else stated something, I'm very thankful. You can be sure that I'm gonna donate the money to to um, to a good charity to kids who needs food, health, and education. I love it. Thank you. So, okay, let's continue. Like what I wanted to say is that all of these are trades which are very simple. So you don't need to be an ICT charter to see these trades, and you don't need to be a professional trader for 20 years. I'm trying to really explain it to you on simple logic. That doesn't mean that you should not study ICT, because like the more you study, the more you learn, the more you spend time um, inside price action and looking at those things, the better you will get. So me looking at the price action, I have seen other trades which I would take when I would be just me and I'm sitting in front of my PC. But I'm really tapping this down for you to take trades which everybody can replicate, and everybody should understand why I'm taking a trade when I'm doing this backtest right now. And that's what I want to give to you, something you can build up. But that doesn't mean just because it's simple, you should stop studying, because there's so much more and you can make so much more out of this concept together with ICT and other entry models. So even though if you have good trades, even though if you have a very successful weeks, keep on studying, because I want to have warriors. We are building warriors here, warriors who will take over the market. And that's the goal. I want to have really people who change their life, who do complete turnaround for their loved ones and themselves. And once you reach that, I really hope you remember what I'm doing here, and then you also help other people's. Okay, let's continue. So retirement setup, I didn't take it, but that's an easy trade to take. I got unlucky, stopped out. That's life. Let's continue. So we see expansion to the downside. We are reaching 1.5, we're going deeper. So now we are in the IDR session. So now it's very important. So far, the ODR extends the range. So you see that, like if you take we see this kind of visual expansion. So normally, like if at the market now, I would, as crazy it sounds for you, but like I would I would expect now that this session is taking out at least this high, just based on how the models are working together. I could be wrong, but that's what I would expect. So that would be my narrative for the session right now. Yeah. So I would be slightly towards long trades. So let's see. So nice, we're returning to the 2.5, we're getting rejected here. And look what is happening right now. We have a beautiful fair value gap over here. Here we have the midline of the range, which we formed right now. You see this all with my script 1.3. You can download it. You can use it on TradingView for free. So I would like to take a long trade here. So we are rejecting from the midline. I zoom a little bit in that you see it better. So we had one rejection. We are going above this, and I expect that price will come up. We are expecting. So this is my minimum target I want to see for a long trade. So let's try this. My stop would be below the opening price, 2 ticks, 1, 2 ticks below the opening price. You can show this if you use the 1.3 version, show opening line and extend. Yeah. This is the line here where I put my stop. As you can see, This is the line. Also, like as additional confluence for this situation, if you turn on the open close comparison, which is called box color based on open on close, that's from part 2 of my video series. So if it's red, you want to look for a short. If it's green, you want to look for a long. So you see, this, like, be careful with this one. It's not always right. It's quite high. It's quite good. But like that's just like a tick which helps you to understand the situation. So in this scenario, it's also showing you that you would look for, or you can consider look for a long when it's in line with your box model and everything we have seen so far. So you see this tree session, the open close coloring is very precise. So here we have a green one, we extend to the upside. We have a red one, which is showing we're looking for shorts, which is true. And now we will figure out if the last one is true also. So as I said, my target would be at least above the DR here. And let's see if this will work out. So as expected, now it's 10:25, so we are closing positive. We are already closing with an early indication in the first candle after the DR. And we are closing above, so we have confirmation. We already reached my target. That's it. It is done. Number 10. It's another winner. And we at 3.5. So what I took from the other one, I just put it on top. So we are 18R. Of course, you could have gone for a higher target, but like, I don't know, like for me, that's enough. I could have taken the 0.5 retracement, but like I said, like I expect him at least to go above here. That's the low-hanging fruit for me. Done and dusted. That's it. So now it's gonna be interesting because, like I said, we are expecting this kind of formation when we see a range expansion model. So again, what I said before, look at the mid price from the ODR, look where we're pricing. Like that's giving you a lot of ideas what market is. Look at the previous mid prices and see how price is reacting on that. That's a very important point to study. So technically what could happen now is we could see this and not to this line up there means nothing, but that could be price action we will see for the rest of the session. I would like expecting kind of this. So this line doesn't mean anything. That's just to show you how price expansion looks like. This line doesn't mean anything. So let's see. So we're extending higher. Again, watch behavior on the standard deviation levels. So now we can, by the way, remove this one. I can draw the new one. So I don't want to take a long because of the model forming here, because I would not expect price to go higher here. That would be not my understanding. I would rather see something going down here, maybe even down for another retirement setup and then maybe up again. But I'm not interested to look for a long right now. Okay, set, done. So now I would like at least this one to be taken out and then maybe take another long try over here. Or even when we go return over here. Let's see. Now, beautiful. That's my trigger point. Nothing more to say. We take out the sell side liquidity over here. We are rejecting from the opening price inside a fair value gap. This is still valid for me because just the wick into here is not taking away the fair value gap. So I'm gonna enter long now. Again, I'm working with a 5-minute chart. Trust me that my entries normally would be more like this. instead of up here, but like let's keep it fair. And I would put my stop below the IDR levels because I don't think price will come back here. It should not. It's also the retirement setup without the context I explained. It's just a simple retirement setup. So what time do we have? It's 12 o'clock. So I expect price to go up at least above these levels. So I think I would be targeting either this high as a first target or this high. So we have to take this one, else we can't take this trade, at least with the stop over here. So let's have this as a target here, and from there we will see. Again, this is the simple retirement setup. You can forget everything what I was talking about. This is just a simple retirement setup also. The context I'm giving you is just giving you more explanation, but the retirement setup is the setup I'm talking non-stop about. One of the best setups, in my opinion, you can find. So we are taking some heat. As expected, price goes up. You see this little volume imbalance over here and here that tips away what price will be do next. We have a small one over here. But again, we are expecting expansion to the upside. So that could have been a little influence for your decision making and more confidence for taking a trade down here. See? Did we tap it? Yes. So done, trade finished. How much? 2.5, 20.5. Setup done. I would be done and dusted for the day. Let's look what we see. Here could be another potential entry if you want to take it. Like nice fair value gap, return if you expect price to come higher here. That would be main entry. Rejection over here. But I would prefer when it's coming a little bit lower here, but that could be an entry. Nothing for me to trade, just delivering context here. As you can see, would have worked out, but so far not really up to the top. It's 15 last hour of the trading day. Again, rejection from these areas, nothing for me, I want to trade. I don't take a trade because we already had two really good trades, so I don't wanna, why would I trade this one? We have 1 hour left, just doesn't make sense for me. Even though, as you can see, trades working out or would be working out, both of them, both setups worked out. So there is like this one, which I showed you, is one entry here inside this one. Fair value gaps with DR, IDR levels are a good thing to look at. Then there is another one, which is in here. I'm pretty sure if you switch into the lower time frames, you will see a better fair value gap, but there is a small one too. So yeah. Session is over. So you would have sold up here because the session is over. Okay, so another day. That was Thursday. So I think we're gonna finish Friday and then like it's crazy. 1 week, just 5 days with all what I'm talking about. It's almost 2 hours, guys. I thought we could at least make 10 days or something like that, but I overestimated or underestimated how much I have to say about what is happening here. Okay, so session over. We are looking now for the ADR session. But again, it's what I said before the day was finished. That's really range expansion. Like in Germany, we call this Trompete. And normally traders have a saying, Trompete kostet Knete. That means translated, a trumpet costs you money. And you see why, because normal traders, they would work with higher and low, with highs and lows. So first we take out buy side liquidity here, we take out sell side liquidity. We go up, we take out buy side liquidity. We go down, we take out sell side liquidity. And we go up again and we are taking out all the liquidity on the buy side over here, just to then drop down almost 80% retracing this movement and taking out all the internal liquidity in here, just to go up again and take out all this internal build-up liquidity again. So 90% of the traders in the world would lose money on such a day. If you understand DR, if you understand how the single DR sessions are working together, you're doomed to make money in this one, because like you see it, you know it. You have a high probability understanding what is happening next. And again, this is all with anything looking at a higher time frame or using any advanced stuff, which I can teach you, which ICT is teaching you every day. This is very simple stuff for now. Okay, last day. Let's go to the finishing line. So as you can see, ADR is opening. So let's see what we can get over here. So nothing interesting, like you can see that all our previous day DR levels are below us. So we're way above them. So right now I don't see anything interesting for me. I see volume imbalances over here and over here. So I'm not very curious right now. Nothing curious. So we get a confirmation, but like I said, like with this expansion here, the volume imbalances, I would like to see price coming back into this area for now. So we have a confirmation, we are returning over here. Let's see if we get us a retirement setup. So now we're at the 50% level. We're having two volume imbalances here and here. But I don't see a clear rejection, so no, nothing for me yet. We are closing one of the volume imbalances. We are getting rejected from the second one and the DR here. Closing the second one now, closing above DR, getting rejected from the DR, leaving another volume imbalance over here. So this trade would have worked out. I didn't take it because I didn't like to close below and then return, but that could be one. If you take the fair value gap here, you have confirmation long. We didn't reach into the fair value gap. Pretty sure in a lower time frame we will add into this fair value gap. You have the confluence from volume imbalance, so that's definitely a trade which could be taken from you. But I am not interested at this point, so yeah. And as you see, we left the volume imbalance, price is closing this again. Nothing interesting for me. Or another volume imbalance. Whenever you have days where a lot of these volume imbalances are happening intraday, it's normally a day where the market will be kind of choppy, at least for the session, because like really strong movements, strong extension, strong movements like this one here, from here to here, they normally don't leave volume imbalances. Normally they leave the volume imbalance in the last third of the movement. But like this one, for example, there's not a single volume imbalance. I mean, there is a small one, but this one can be neglected. But you see like strong movements into the right direction, normally they don't leave a lot of volume imbalances. And a day like that, when you see too much of them, it's like a exclamation mark for you have to expect price to chop around a little bit. Because like, that's just, yeah, that's just what it is. So nothing for me to trade. yeah, when I'm saying nothing for me to trade, I mean, like I told you, this setup, this could be another potential setup, but I'm not interested. So this setup would have worked out beautiful if you would take this, whatever, take your stop here, here. So 3R would have worked out. If you take the rejection over here, say over here, new high, 2R. So a lot of setups, but I don't like it. So session is almost over, another 1.5 hours. So that's also something like that's the difference between like if you look at price in terms of hindsight, so you see everything and you just think, yeah, okay, this trade is obvious. Like this example just shows you that you have to be real with yourself. So even if I see this price action, I would not tell you that I would have taken this trade because I just don't like it how it happened around here. Yeah. If this candle would have closed above, I mean, I know I'm talking a little bit extreme here. It's literally it's one tick difference, but like for me that was enough to not consider a trade here, even with the volume imbalances here and even with the fair value gap over here, right? So, but like it's easy, like don't lie to yourself when you're doing big testing. Like backtesting is about what you really see and what you want to trade. So even when I know the price movement here, I would have not told you that I would have taken this trade because I don't like it. It's simply what it is. Even though this would be a good trade. I mean, obviously. Nothing, nothing. We are ending the session in 5 minutes, so nothing for me here. So now we are here. Tell me, like in the chat now a question for the chat. So like you have the first session ready. What does this look to you? What could be one conclusion out of what you see on my screen right now? What model are we seeing, maybe? What potential model we will see? Yeah, very good. Very good. Exactly. So range expansion to the upside. So with all this, look, watch again. Like this is a simple thing which I gave to you, and most people didn't even know that it was in the script. But again, it's quite precise. It's not 80%, but let's say it's like 60, 65%. It gives you a good idea where we're looking, into what direction we are looking. So range expansion. So of course, we are looking for potential long trades. Let's see if we will get one. Oh, another half an hour to go. So no fair value gap over here, right? But what do we see here? What do we have here? Compared in difference to here, like this is a big, like that sounds like very pinnable, but I didn't like this candle because it closed below, but I like this candle now. Why do I like this candle more than I liked it over here? Somebody answer that? Yes, 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 yes. Exactly, but you see the difference here? It's looking the same, but we are closing below. Yeah, we take it later on, but this, I didn't like it. Close below the midpoint and closing below the open price. So that's why I didn't want to take this trade. This picture now, I can see the reaction here. Now we are dipping down a little bit, doesn't matter to me. So I would look for a long trade now. So let's enter. We are here. Stop would be below the 1 point retracement here. You could even take a really crazy stop loss over here, 2 ticks below the low. So, but I'm trying to teach something which everybody can do. So use your standard deviation level from the RDR session, 2 stops below, 2 ticks below. Now we have to see we are expecting a range expansion. So what target are we expecting when we are looking at a range expansion? Is it 0.5 or is it at least 1? So in a range expansion upside model, what is the standard deviation we are expecting? 0.5 or 1? Exactly 1. Yes. So we are expecting 1 standard deviation. So it means we are looking for a target minimum 0.5 up to 1 standard deviation. So we will take some profits over here and we are targeting in with the rest of the position. We're going to target the 1 standard deviation. So let's see. Okay, confirmation long. There is another nice entry, confirmation long. That would be a nice fair value gap entry. Still price is hovering around the DR levels, respecting that. That's a positive sign for your long trade. We are going below the DR, IDR levels. We are closing, we are taking it immediately back. Now we're closing below. Look what this is. We are taking out this sell side liquidity over here. And we're going back above the DR, IDR levels. So we didn't reach 0.5 yet, so no partials taking yet. So we are returning back over here. Actually, I would expect it to take out these lows before we really go up, but let's see. Yeah, so we take this out, we take the sell side liquidity over here, and now price should go straight up. So we take our first partial over here, which would be 50%. So that's 1R getting rejected. Beautiful rejection from the 0.5 retracement. We're going back. So we would be stopped out because our stop would be already on break even. So I am stopped out of this trade. But I think still I would expect market to go up because that would be just break even, stop out. The stop level doesn't mean anything here. You see we have a nice volume imbalance here, which we didn't take with this one. So I would still consider this valid, and we are also outside the session. So that would be 1 hour plus, and the rest would be stopped out on break even. 21.5. So let's see how this plays out. Like I would bet that we will go higher, but like maybe I'm wrong. So we are generating the new RDR now. And as I said, unlucky stopped out happens. So as we can see, it would have worked out, stopped out because break even, but that's what it is. Happens to me so many times, you can't even imagine, and that's perfectly fine. So again, which model are we in? Now it's confirmed. In the ODR, we were expecting it, but now we have a confirmation for what? Yeah, you could have re-entered at 0.5, but I like honestly, I'm honest here. I would not re-enter there because like it's 8:30 to 9:30. 9:30 can be quite choppy. So there is no need for me to re-enter there. Exactly, expansion. So we are looking for A retracement somewhere here, preferable around the 0.5. There is a small volume imbalance up here. So we would like price to return here or there somewhere. So let's see if we will get a chance today. Didn't reach it, so no chance. Is finished. We are getting early confirmation with the first early indication with the first candle. We are rejecting from the top. We are going over. We're having a long confirmation now. Now we are waiting for an entry. So now rejection over here. We could take this one. It's just one candle, so I would like to wait for a little bit more confirmation. Yeah, unclear for me right now. Rejection from the top. We are not closing above. Waiting. Again, rejection. Now we are closing above again, but it's not convenient for me. We have to remove this, by the way. Zack, and this, because it's the new RDR. So I don't like it yet. Only one candle rejection from the DR. We're going below the IDR. I really would like to price to come down here somewhere. I don't know. I really would like to at least come into the area here. Maybe taking out the sell side liquidity here, filling the volume imbalance. And in best case, I want to see like if I can wish my price, that would be my wish. But like, let's see. I'm clicking slowly now. So we're going down. We have 3 lows here. I don't think they're gonna hold. So now we are rejecting from the sell side liquidity. Oh, that's quite interesting here. Yeah, I don't know. Under normal circumstances, I would most probably enter long now, but I can't tell you why. I'm not allowed to do this, but let's leave it out of the statistic. But like I would think about taking a long here. Yeah. Okay, so we missed this one. Now we are going up. We are closing above the IDR. We are closing above the DR. So let's find an entry. If we can find an entry, we're taking now any retracement, we will take long now. Let's see. That's not enough. Not enough. Rejection from the DR. We're going long now. Stop here. Why it doesn't make sense to have your stop here? Somebody can explain it to me? Why it doesn't make sense to put your stop loss here? Like every retail trader would take his stop loss here. Why we would not do this? Equal lows, exactly. It's like if price comes down, we will look to take this area out because everybody have his sell stops here. So that's why for this scenario, we are just using the IDR, 2 ticks below the IDR, because if price comes below this level, I think the chance is very high that we will also take out this level, right? Our target would be, we are having a range expansion day, so we are looking for at least 1.0 expansion. Let's see. So we are reaching 0.5. We are not taking any partial here. It's not enough to take partials. So it seems like that we are like rejecting from the 0.5, but it's not a clear rejection in my opinion. So it's not the cleanest one. So what time is it? Yeah, we're ending like it's almost about to close the session. 50, 54. So that was the last candle. So we would close because the session is ending here. That would be close 0.88. So let's be generous. 20, another R on top of it, another winning trade. Pretty sure, like just out of curiosity, because this price action is very interesting. Just want to see how we end this scenario. So that's Friday close. Yeah. Okay. You know. Yeah, that was like, I can't tell you why this is very interesting because I would break my NDAs talking about what I can't explain it to you just because it would go against everything which everybody else is teaching with equal lows and all of this stuff. But like there was something very interesting happening here, which would have made me enter here, but I can't explain it without. I can do this in March next year. But like that was very interesting, and that's also why I was a little bit surprised that we didn't see the expansion over here. But like as you can see, that was just Friday close, and then on Monday immediately with the opening we are going over this 1 point standard deviation. So okay, that's it. So let's see. We had 2 trades in 1 week, 4 losing trades. All of the losing trades were either -1R or even less when I reduced my stop. We had some break evens. I didn't count how many break evens we had, but I would say like 3 or 4. We will have to pay to find out. No, you don't have like this. Trust me, guys, you can't pay what I would have to pay if I violate this NDA. That's too much. Anyway, so we had like maybe 3 or 4 break-even trades. I'm not sure. I would say like try three break-even trades. So 4 losing trades, and 9 winning trades. So that gives us what in percentage? So that's 0.75 win rate. So 75% win rate. And our risk reward ratio would be, on our risk reward ratio would be 12R, which we risk. So we have almost 24. So it would be at least 1 to 2. Without taking, like, technically we would have to take the break evens within. So I think that's quite good. Considering that I missed the 2 really crazy good retirement setups, which would have been really nice. But I mean, this is like, to be honest, let's be real. Like, I don't know a lot of people except they are listening to ICT or they're listening to DR IDR 13 trades. Yeah, okay. Why? Ah, yeah, okay, sorry, I missed the last one, right? So 13 trades. So then that makes in total then a little bit less than 75. But then we have 70% win rate for this week. And actually these stats are aligning very good with my personal stats. So in average, I have a 70 to 80% win rate when I'm trading. So I think that's quite precise, I would say so. But the point is, like, I don't know a lot of people. I know some people in the DR IDR space and some people in ICT who can pull down such a week, but I don't know a lot of people in any other area which really can make 20 plus R, and explaining it in that logic. And like, I don't know, it's not surprising to me, the R, because I know I do this by myself. Last week I had or like this week, which is over now, I ended up with 23 plus R. So it's nothing crazy for me, but I think it's kind of crazy for a lot of people who are trading, because like this is like, that looks like some monthly or even 2 month goals for other people. But it's not about the R. It's not about like how much you can make with the trades. What is really important to me for this stream today is no, I don't bank holiday in US. I'm not trading. This is not interesting to me. But what is really important for me is for you that like you can go out of the stream and you can tell me that all the trades I showed and how I explained it would have made sense to you. And that you tell me, yes, it all makes sense, and it also makes sense why you don't take some of the setups. That's what I want to teach you. I mean, I don't have to train this anymore. I do this for too long now. For me, this is just an exercise I'm doing together with you and trying to teach you and give you my thoughts when I'm looking at price, to help you to understand which trade to take, where to enter, what to look at. Cares about Robin's Cup? Sorry. Yeah, there's a lot of, like, actually, there are a lot of Germans working in the US banks, that I can tell you. So, are you happy with the stream? I hope it helped you, really. We spend a lot of time together. It's amazing. Like, we had like constantly 600, 700 people watching the stream. And I really hope you do enjoy it. And I really hope next week, now Monday is coming. So I hope I gave you some more tools to attack the week. I love you guys. Stay healthy. Be careful in the market. This week it's gonna be kind of boring, I expect to. So don't do crazy things. And remember, 7 hour a week, 7 times flipping your account, and you're gonna be financially free, and you're gonna be able to donate some money with that. Just believe in it, believe in yourself, work on your mental. I gave away some tips where I said like mental is very important for being a good trader. So work on yourself, work on your mental, work on your studying of the price, and you're gonna be doomed to make profit. I can guarantee you that. If you manage both of these areas, which I told you, you're gonna be doomed to make profit. Love you guys. See you next time. Thank you for listening to the stream. Bye bye.